Let's go off and talk about decentralized social media. So Aave's decentralized social media platform Lens Protocol raised a $15 million funding round recently from a group of high-profile investors, including Uniswap CEO Hayden Adams, OpenSea co-founder Alex Atala, and Polygon co-founder Sandeep Nailwal. Will, what do you think? I feel like we're seeing bigger and bigger raises creeping back into the Web3 social media kind of NFT realm. We saw it cool off a little bit, but they seem to be ramping back up. What do you make of this?
Yeah, it's all speculation, right? Because I don't have any hard numbers in front of us, but we do a good job of covering these rounds on the show. So I agree with you. I think there was a pause over the last 12 months as teams and VC firms were kind of figuring out where things were flowing, where money was going. And they paused definitely during November, during the low lows, FTX and all that. But I think it's starting to pop back up. I want to throw a question back to you, Jen, and sort of talk about these products. It's funny how we see bigger checks for some of these social media ideas. But to date, there hasn't really been an innovative Web3 social media idea that has generated revenue. They're often sort of created. Every sort of camp has their own version of it, and then it just kind of exists for a while, and then it dies. I mean, arguably, the only one that's really done well is Telegram, and they tried to launch their own blockchain thing later, and it exists. It's not technically with the project itself. They basically got that sued out of existence with the SEC, but there is a version of it where you can use TON, the TON token, on top of it. That's the best I can think of for a Web3 social media idea. What's your take on that?
Yeah, I don't know if revenue is what all of these decentralized social platforms are trying to solve for right now. I think the bigger problem for them is users. I don't think anyone has figured out the Web3 social platform revenue issue. I don't know if tokens are the right answer, especially given what's happening in the regulatory atmosphere, especially here in the US. I think everyone is trying to figure out, how do we get users from Facebook, from Twitter, to come over, actually understand the CVP here, understand what owning your own data, what owning your own creations actually means, and then we'll figure out the revenue piece. I don't know if that's top of mind, especially when I look at the investors who have taken part in this round. I don't think that these are the types of investors that would be pushing for revenue at this stage in the game. I think they would be pushing for more innovation on how we get users, how we get people using it. Adam, what do you think?
Yeah, social media is all about eyeballs. And the thing that we've seen consistently, and again, this type of platform has been around for a long time. In the world of Bitcoin, these were typically thought of as free speech platforms. And they have an audience, they have a constituency that they address. It's just not everybody. And it's not even most people, right? It tends to be people who are dissatisfied with the existing social media landscape. And the problem there is that that's actually a much smaller proportion of people once you get down to it. A lot of people will sort of signal that they're unhappy or vocally, talk about how they're unhappy. But at the end of the day, they wind up staying on these platforms, whether you're talking about Twitter or Facebook, right? So that's the underlying problem. Is it's really hard to build a network effect around social media. And social media is one of those things where, to the extent that you don't have a network effect, there's literally no reason to use your product outside of ideological people. And the more ideological people you have on your product early on, the more it pushes the community development in that direction, which then makes it really, really hard to get mass adoption. We've seen products like Minds from back in the day. That was, I think, one of kind of the more successful ones that abstracted more of the complexity around this. But I think that complexity is the key word here. When you're talking about social media and you're talking about onboarding very large numbers of people, that's just really hard to do when you're talking about, hey, everybody needs a wallet, everybody needs to understand at least some fundamentals. And the more you abstract that, the less that the whole system kind of makes sense. So I firmly believe that there's a thing here, there's a foundational technology to be had. But so far, again, it's anybody's game when it's going to be. I have yet to see any winners. And I don't think $15 million moves the needle on getting this one there, I got to tell you. What do you think, Will?
Something, though.
Well, that's kind of my whole question, right? Is people are giving checks for these funding rounds because they expect money back in the future at some point. They're not doing this altruistically, right? There are conditions for all these checks to be written. And many angel checks do have the assumption that it's going to zero at some point. That is the nature of writing angel checks. But at some point, you have to think that a lot of these checks are expecting money. And if you can't get users, let alone revenue, I don't really know where this goes. And a lot of these Web3 ideas kind of just sputter off. It's so hard to build network effects. I mean, that's sort of a meme at this point. All these different companies that do well, it's because they have a network effect and they last. These Web3 ideas, the only ones that really do have a network effect is something like a MetaMask, where it's just built into Chrome, it's a browser, you have it, but it's just for trading tokens. It's not really for talking to your friends. The only ones that have really done well are maybe like the Bitcoin Talk Forum, which decidedly not really a Web3 thing, and then maybe some spin-offs like Nostr that are starting to catch up a little bit. But even those are still very, very small. So from a VC perspective, I'd be interested to hearing the pitch on why it's worth investing in these things when they're so tiny and there doesn't seem to be any sort of breakaway speed for them. Jen, I'll give it to you.
Yeah, I want to hear Adam's thoughts, so I'll make it super quick. Every time we talk about a raise, we talk about the narrative, what people are talking about in the media. And just weeks ago, which I know probably the raise happened before weeks ago, there was a lot of talk about Twitter giving in to government requests for takedown of content. And that discussion opened up the doors again for this whole decentralized social idea. And so I wonder if there's going to be, a catalyst moment sometime in the future, which makes things click for large groups of people at a time that will bring the users to the platform. Adam, I saw your hand go up, so I'll kick it off to you. But what do you think? Do you think there's going to be this like catalyzing event?
I mean, I think that that's always the hope for these types of projects. To the kind of earlier point about the money, right? Like $15 million is a lot of money in real life, but in the world of startups, it's not that much money. In the world of VC, it's not that much money. Again, like there are firms out there, where it's like the minimum check that they'll put into something before they consider it investable is like $25 to $50 million. So again, like it's just important to keep this in perspective. It is a lot of money, but for a venture like this and with the challenges that it has to overcome to actually become successful, again, I think a lot of these things wind up getting investments because they're tied directly to the DeFi ecosystem. And there's just a cohort of investors who has the thesis that DeFi is the future and will be the backing of the future. And that may be true, but I think to the average person today, it's a really, really hard sell.